Let's talk about your future, your dreams, your financial freedom. Investing is not just for the wealthy, it's for everyone. It's about putting your money to work for you so you can achieve your goals. Think about it. A new home, early retirement, financial security for your loved ones. These are all possible through the power of investing. Let's explore the world of investing together and unlock your path to financial success. Before we dive into investments, we need to understand two fundamental concepts: assets and liabilities. Think of assets as your money-making machines. They put money in your pocket. Assets are things you own that have value. On the other hand, we have liabilities. Liabilities are things that take money out of your pocket. Understanding the difference between assets and liabilities is crucial for making smart financial decisions. This understanding will guide your investment choices and set you on the path to financial freedom. Assets are your financial allies. They represent everything you own that has value and the potential to grow your wealth. Imagine owning a rental property. Every month, the rent you collect adds to your income stream. Or picture a stock portfolio steadily increasing in value. Stocks, bonds, real estate, gold, these are all examples of assets. Some offer steady income, others provide long-term growth. Building a strong asset base is the cornerstone of financial success. Start building your asset column today. Now, let's talk about liabilities. Think of them as leaks in your financial ship. They represent financial obligations that drain your resources. Imagine carrying a large credit card balance with high interest rates. Every month, a significant portion of your income goes towards paying off that debt, money that could have been invested in assets. Remember, less debt equals more freedom to invest and build wealth. Understanding the difference between assets and liabilities is like having a financial compass. It guides your investment decisions and sets you on a course toward financial success. Your goal? Maximize assets and minimize liabilities. When you invest, you're acquiring assets with the potential to grow your wealth. Conversely, every dollar tied up in a liability slows down your progress. By focusing on acquiring income-generating assets and managing your liabilities wisely, you create a positive financial flow. This understanding empowers you to make informed investment choices. Remember, knowledge is power, and understanding the asset versus liability equation is fundamental to your investment success. Investing. It sounds complicated, intimidating even, but let me tell you, it doesn't have to be. Think of it like a journey, an exciting adventure towards financial freedom. Now, there are countless ways to invest your hard-earned money, each with its own risks and rewards. First up, we have the stock market. It's the beating heart of the financial world. Owning a stock means owning a small piece of that company. Then there are bonds, like loans you give to governments or corporations, earning interest over a fixed period. And let's not forget real estate, a tangible asset that can provide rental income and appreciate in value. Let's dive into the exciting world of stocks. Imagine owning a tiny piece of a giant company like Apple or Amazon. When you buy a stock, you're buying a small slice of ownership in that company. As the company grows and its profits increase, the value of your stock is likely to rise too. Some companies also share their profits with shareholders through dividends. Stocks offer the potential for high returns, but remember, with higher potential rewards come higher risks. The stock market can be volatile, meaning prices can go up and down. It's important to do your research, invest in companies you believe in, and be prepared for some ups and downs along the way. Think long-term, diversify your portfolio, and watch your money grow alongside the companies you believe in. While stocks are an exciting avenue for investment, remember the golden rule: diversification. Don't put all your eggs in one basket. Let's explore other investment options to build a well-rounded portfolio. Bonds are like the reliable friends of the investment world. When you buy a bond, you're essentially lending money to a government or corporation. Real estate is another popular asset class. Owning property can provide rental income and the potential for appreciation in value over time. Then we have mutual funds and ETFs, which are like baskets of stocks or bonds. They allow you to invest in a diversified portfolio of assets with a single purchase. Remember, diversification is key to mitigating risk and maximizing your potential for long-term financial success. Let's dive deeper into the world of stocks. Imagine owning a tiny piece of a company like Apple or Amazon. When you buy a stock, you're essentially buying a small piece of ownership in that company. As the company grows and its profits increase, so does the value of your stock, leading to capital appreciation. Some companies also share their profits with shareholders through dividends. Dividends can provide a steady stream of passive income. However, it's important to remember that stocks come with risks. Investing in stocks is like planting a tree. You need to nurture it, give it time to grow, and weather any storms that come its way. Imagine lending money to the government or a large corporation. That's essentially what you're doing when you invest in bonds. Bonds are debt securities that represent a loan made by an investor to a borrower. When you buy a bond, you're lending money to the issuer for a fixed period, known as the maturity date. In return, the issuer agrees to pay you a fixed interest rate, known as the coupon rate, at regular intervals. Bonds are generally considered less risky than stocks. They offer a fixed income stream, making them attractive to investors seeking stability and income. Bonds can provide stability and income to your portfolio, but it's important to diversify and understand the relationship between interest rates and bond prices. Mutual funds and ETFs, investing in baskets. Imagine buying a basket of different fruits instead of just one. That's the basic idea behind mutual funds and ETFs, or exchange-traded funds. They allow you to invest in a diversified portfolio of assets with a single purchase. Mutual funds pool money from multiple investors to purchase a basket of stocks, bonds, or other assets. ETFs are similar to mutual funds but are traded on stock exchanges like individual stocks. Both mutual funds and ETFs offer a convenient way to diversify your portfolio and reduce risk. However, it's essential to carefully consider the fund's investment objectives, fees, and historical performance before investing. Real estate and beyond. Exploring tangible assets. Real estate, gold, commodities. These are all examples of tangible assets. Unlike stocks and bonds, which are paper assets, tangible assets have a physical form and offer a different set of investment characteristics. Real estate is a popular investment choice. Owning property can provide rental income and the potential for appreciation in value over time. Gold has been a store of value for centuries. It's often seen as a hedge against inflation and economic uncertainty. Commodities are raw materials such as oil, gold, and agricultural products. Tangible assets can provide diversification and a hedge against inflation. However, they also come with their own set of risks and require specialized knowledge. Weighing the scales. Stocks. Stocks offer that thrilling potential for high returns, but every exciting ride has its ups and downs. Stocks have historically outperformed other asset classes over the long term. They offer the potential for significant capital appreciation. Plus, dividends can provide a steady stream of passive income. However, stock markets can be volatile. Investing in stocks requires patience, a long-term perspective, and a willingness to stomach some volatility. Do your research, understand the companies you're investing in, and ride the wave to potential financial success. Bonds, those reliable friends of the investment world, offer stability and a fixed income stream. On the plus side, bonds are generally considered less risky than stocks. They provide a predictable income stream through regular interest payments. Government bonds especially are often seen as a safe haven during economic storms. However, bonds typically offer lower returns compared to stocks. Think of bonds as the anchors of your portfolio, providing stability and balance to the potential volatility of stocks. We ventured into stocks and bonds, but the investment universe extends far beyond. Explore mutual funds, ETFs, real estate, and tangible assets. Mutual funds and ETFs offer instant diversification. They spread risk and enhance returns. Managed by professionals, they come with fees. Real estate offers security and potential income, but it can be illiquid and costly. Tangible assets hedge against inflation but are volatile. So, you're ready to embark on your investment journey? It's an exciting step towards building a brighter financial future. But with so many options, it's understandable to feel a bit overwhelmed. Don't worry, every expert was once a beginner. For those just dipping their toes into the investment waters, it's best to start with simplicity and safety. Think of it like learning to ride a bike. You wouldn't hop on a Harley-Davidson for your first ride, right? A great starting point is a high-yield savings account or a money market account. While these may not offer the highest returns, they provide a safe haven for your money, earning a bit of interest while you gain your footing. Another beginner-friendly option is index funds or ETFs that track the broader market, like the S&P 500. These provide instant diversification, spreading your risk across a basket of established companies. It's like buying a slice of the entire pie instead of betting on a single ingredient. Remember, knowledge is power. As you gain experience and confidence, you can gradually explore other investment avenues. Start small, stay consistent, and watch your financial seeds sprout. Section 2. Leveling up intermediate investment strategies. Congratulations, you've mastered the basics and are ready to level up your investment game. Think of this stage as transitioning from that trusty bicycle to a sleek scooter. You're gaining speed and exploring new terrains. At this level, you can start incorporating individual stocks into your portfolio. Remember, knowledge is key. Research companies thoroughly, understand their financials, and invest in businesses you believe in. It's like choosing travel companions for your financial journey. You want those who align with your values and goals. Consider exploring different sectors beyond the familiar tech giants. Look into healthcare, renewable energy, or emerging markets. Diversify your portfolio and capitalize on growth opportunities across various industries. Real estate can also become a part of your investment strategy. Owning rental properties can provide passive income and potential appreciation. However, it's essential to research local markets, understand property management, and be prepared for the responsibilities that come with being a landlord. Remember, investing is a marathon, not a sprint. Stay patient, continue learning, and adjust your strategy as your knowledge and risk tolerance evolve. You're well on your way to building a diversified and robust investment portfolio. Section 3. Mastering the market advanced investing. You've honed your skills and built a solid investment foundation. Now, you're ready for advanced investing like trading a scooter for a sports car. Explore sophisticated strategies like options trading or hedge funds. These offer high returns but come with higher risks. Consider diversifying globally. Look into alternative investments like commodities or collectibles. Remember, with great power comes great responsibility. Advanced investing requires meticulous research and calculated risks. Consult with a financial advisor for personalized guidance. Ensure your investments align with your long-term goals. You're in the driver's seat, but a seasoned co-pilot helps. Section 1. Your journey to financial freedom starts now. We've journeyed together through the exciting, sometimes intimidating world of investing. We've explored the building blocks of wealth, the dynamics of assets and liabilities, and the diverse landscape of investment opportunities. Remember that feeling of wanting to buy your dream home, retire early, or secure your children's future? Those dreams? They're not just distant hopes. They're achievable goals within your reach through the power of investing. We've delved into stocks, those pieces of ownership in companies poised for growth, bonds, the reliable friends offering steady income, and the diversified baskets of mutual funds and ETFs. We've even ventured into the tangible world of real estate and explored alternative avenues. It's been quite a journey, hasn't it? But remember, this is just the beginning. The most important step is the one you take today. Every expert was once a beginner, taking that first step towards financial empowerment. Section 2. Embrace the power of investing. Investing is not just about numbers and charts. It's about taking control of your financial destiny. It's about planting seeds today to reap the rewards tomorrow. About building a brighter future for yourself and your loved ones. It's about embracing the power of compound growth, witnessing your money work for you, generating more money, and propelling you towards your financial goals. It's about transforming from a passive observer to an active participant in your financial well-being. Don't let fear or procrastination hold you back. Start small, stay consistent, and never stop learning. Embrace the journey, seek knowledge, and remember that every step you take, no matter how small, brings you closer to your financial aspirations. So take that first step today. Open that savings account, explore those investment options, and begin your journey towards financial freedom. The future is yours to create, and with the power of investing, you hold the key.